How's it, everyone? So today we'll be just looking at the S&P 500 chart, and that is looking quite interesting. As you can see there, we are here with Petri Redelinghuys, the founder of Erenia Capital. So let's look at the charts and what it's showing us. Hope you get some value from this. So Petri, over to you. What are these charts showing us?
Good afternoon, morning, evening, whatever time it is that you're watching. I don't know. So we're looking at the S&P 500 chart. And basically what we're doing here is we're looking at a weekly chart, just a regular sort of weekly candle chart. And I think what is concerning to me is that we have this, well, firstly, the market has now doubled from the COVID crash lows, which is bullish and good and all the rest. But the range in which it's trading is tightening and tightening and tightening and tightening. Also, you can overlay some market breadth data on this, which is not done on this particular chart. But, market breadth is deteriorating in the sense that fewer and fewer shares are trading higher, but the market's trading higher. So it's the really, really large cap companies that are pushing the market up, and the smaller companies are starting to struggle a little bit. So this rising wedge, I think, is definitely something to be aware of. Do I think that the Federal Reserve Bank, we're waiting for the Jackson Hole Symposium sort of outcome and to get a read on what they're going to do with tapering? Do I think that they can print money and keep the party going for another year or two? Probably, possible. Do I think that we should start being somewhat cautious about piling in new long positions here where the market is at the moment? Yes, I do. If you look at how these sort of wedge formations generally work, we have a relatively decent track record of them being catalysts to poorer moves. And again, this is a theme that you'll see maybe in the previous Bitcoin video, whatever the case is. I like to look for repeating patterns, right? So this sort of rising wedge situation is something that does relatively regularly crop up and create a little bit of drama in the markets. So there we've actually got quite a nice channel that the market traded in for a very long time. It didn't really lead to a very big correction, but these types of sort of repetitive situations is something that I think that is worth looking out for. And let's be honest, this rally that we've had over the last year has been enormous. So I do think this is starting to flash a warning sign or two. So this is a weekly chart. We can then go to a daily chart. Daily looks maybe more or less scary depending on who you ask. At the moment, I mean, obviously the market is making all-time highs, so it's very rich to say, oh, be careful, be careful, be careful when the market is making new highs. But I do think we're sort of one catalyst away from a bigger correction. So it's not necessarily a prediction that the S&P 500 is going to crash in the next couple of weeks. It may continue to trade the way that it is for the next year or so. But I do think that it is definitely a time to start being a bit more cautious and concerned about, putting in some protection. You can use, obviously, downside protection in the likes of options, or you can just lighten the load a bit and sit with a little bit of cash, or ensure that you are investing into things that, even if the S&P 500 does come down, it doesn't necessarily impact the companies that you're invested in.
There you have it, and it's always good sitting on some cash, especially when there's an opportunity after a crash. So sometimes cash isn't the worst option, but there you have it. The S&P 500 is trading at real highs, and we've seen some really high bull runs. So just trade with caution, like we said. This is not financial advice, but this is a chart that is showing some information. So just trade with caution.